All right. Hello there, friends. We, on the behalf of Dirty Economics, welcome you to today's video. The agenda for today is to cover the Forex news and strategies. So, we'll basically be looking at the Forex pairs which moved in our favor or against our favor today. And we'll be looking at the Forex majors. We'll also look at the dollar index today. So, the first we'll try to cover what happened in the currencies, which data was out, the risk ahead, and we will at the end we'll look at the technical charts for the same. So I'm your host Kaushal, and we are joined by Omkar, who's a technical analyst.
Hi Kaushal,
Hi Omkar, how are you?
I'm fine. How are you?
I'm pretty good. I'm still posting on my cat JPY trade, and
So that was a
for
nice call.
for some reason I got my first cipher right.
Yeah.
Anyway, let's start. And what's your pick today?
My pick today is obviously GBP USD because it's the old lady is highly volatile and rightfully so because we are just 1 month away from the referendum now, and
That's
there's a lot of confusion in the markets, and the pair is likely to remain volatile for next 1 month or so.
Okay, so maybe let's start with GBP USD.
Yeah.
Did we have any data today for the pound?
Uh, for pound, we had the second estimate of the GDP, but it was left unchanged at 0.4% quarter on quarter.
All right,
And so there wasn't any big surprises on that front. Uh, what I believe is for next 1 month or so, the economic data is likely to take a backseat, and the focus is likely to be on the polls.
all right,
And it would only be the PMI indicators, in my opinion, that would affect the GBP USD pair. Other than that, I guess this industrial production or trade deficit numbers, etc. They'll just get overshadowed ahead of the referendum.
I see. So maybe let's look at the chart.
Yeah.
So I guess the employment data of pound was pretty solid the last time. The GDP, I guess the expectation was for a much better number, but I guess being unchanged, the pound sold off today.
Yeah.
Um,
So on the daily chart, it's quite clear. We have this higher bottom formations
Right.
on the
So
daily chart.
let's talk about the price action in the past few days first. So like from the past week, we saw a good climb in the pound. It was actually a good long trade.
Yeah.
Uh, I guess there were I guess the sellers came in today, and we'll likely see a retracement lower maybe.
Right. We had, as I said, lower bottom formations, and even from past week, if you see, we had this symmetrical triangle formation,
That's
which was breached yesterday on the higher side.
yeah,
So it did open doors for this larger inverse head and shoulder kind of a thing. We see over here, shoulder, a head, and another shoulder, and the neckline comes around 1.48, but the sellers were back today at a high of 1.4739. But as long as the pair stays above 1.4636 or 1.46 levels, there's a possibility that we will eventually test the neckline level.
all right. But I guess due to the macro scenario, I mean, with the EU referendum, we are unlikely to see a break higher above that.
Yeah, that looks difficult, especially if polls start showing a rise in exit vote.
All right.
So far, the Remain vote has maintained its lead,
Yeah.
and the entire rally, like from 1.30, 1.38 to 1.4770
All right.
or near 1.48 levels. The major part of the rally, in my opinion, is being was funded by short covering.
All right.
Market still is net short on GBP, but
Okay.
then every other week you have this referendum poll showing Remain vote in lead, and that just forced the sellers to unwind their positions.
Okay, so I guess this huge development, this change in the polls was actually during the weekends, because in the past week, I don't guess it was still a
Close call,
close
yes.
it was a close call, but suddenly on Monday we saw that the bets were
Yeah.
actually shifting, and
the another point is that in these referendums are slightly different from the election polls. The uh, over here you have the third category, that is undecided.
That's right.
And when you see a huge number of built up under the undecided category, it is likely that they would eventually join the remain group, because when you are uncertain about the outcome, you prefer to have a status quo,
All
right?
right. Yeah,
So
that's right. We also saw a lot of analysts, a lot of people in our show as well. People, they are still on the side of the remain vote. I
right,
don't think Brexit is a scenario moving ahead.
right.
All right, that was great. So the risk ahead for the pound is the EU referendum polls. So maybe keep an eye on the weekend newspaper, and if you want to trade, if you are trading the pound. So right now on the technical side, Omkar prefers. We can actually see the neckline around 1.48, but breaking that will be tough because of the EU referendum in the next month. So currently we have broken above the triangle formation, and Omkar, what about tomorrow's trade? What do you think?
I think pound will stay above 1.4636, and buyers could come in again ahead of the weekend.
All right.
And usually, the trend of the first 3 days ends up on Thursday, and that's what we have seen. The first 3 days we have had uptrend in pound,
Okay.
and we have had a correction today. So tomorrow it's likely to be a sideways day of action, and we are likely to see pound hovering between 1.4636 and 1.4720 or so.
All right. So tomorrow will be a range play, and if
Range.
you're trading, maybe look at the hourly charts.
Yeah.
All right, that's great. So which is the next market we'll be looking at?
Next we'll be looking at is the euro dollar.
Let's look at Euro pound at first. So if
Yeah, euro pound. We can look at euro pound. Yes.
I guess you'll get good range trade
Euro
too.
Euro pound, we had head and shoulder breakout last week, and
Okay.
then in this week we went back to the neckline around 77.58,
Okay.
and then we had a sell off again.
All,
And this is a classic textbook movement post Euro GB head and shoulder breakout.
all right. So
But
what's the
yeah.
target of this?
The target comes around 0.7350 or so, and that coincides with the 23.6% retracement. That is 73.65 or so.
All right.
So, however, the today's weakness in the pound and actually weak US data. The durable goods orders figure was released. The headline was super strong, but the core figure, which strips out the non-defense and which strips out the defense category as well as the aircraft category, it actually contracted, and
That's
that weighed over US dollar and pushed up euro dollar pair, and that is the reason we are seeing euro pound moving up right now.
all right. So maybe I guess we still have a very macro risk on the pound. So I don't guess that we'll have a catalyst in the near future which could actually push the pair lower to 0.73.
Yeah.
The
I guess the only thing that could push it to further lows is you have a severe risk aversion in the markets, in which case, the demand for the funding currencies rise and the euro would rally.
all right. So
Or
euro and Japanese yen.
euro and Japanese yen.
All right, that's great. Let's look at euro. Maybe let's look at the dollar index first.
Dollar index is quite simple. It's moving in a downtrend right now, and hovering at 38.2% retracement. That is 95.20. Yeah, and as long as the falling trend line remains intact, there is every possibility that we would head back lower to around 94 levels. Once I see a day end closing above the trend line, falling trend line level, then we could see another move higher to around 97 levels or so.
All right. Well, okay, that is fair enough. If you see
Yeah.
a break above the trend line, we are going higher,
Yeah.
or we are expecting a retracement to 94.
Right.
So viewers, if you are worried about the levels, just don't worry. We'll post this up on the website with the levels for all the currency pairs. So let's shift to the famous euro dollar.
Euro dollar.
I guess euro is still a dollar trade.
Euro is still a dollar trade, right? If you see hourly chart, you have a very big falling trend line, which was breached today.
Okay.
However, on the daily time frame, if you see, you have a rising trend line which has remained intact. We saw the pair bounce off from the rising trend line support yesterday,
Yeah.
and it has moved to 1.12 levels today. I guess from here we go higher to around 1.1250, but anywhere above that, fresh offers are likely to come in.
All right.
On a larger scale scheme of things, we need a break below this rising trend line support,
Mm,
which tomorrow it would come around 1.1138, or on Monday around 1.1150. So unless and until this trend line remains intact, there is every possibility that euro could go higher.
right. So I actually drew a cipher on this some days back, and I saw that my CD leg got fulfilled today. So
Good.
I'm actually looking at
Yes, sir.
something. I actually have a bullish target for the euro. Such.
On hourly chart as well, if you plot a cipher, it gives you a target of around 1.13 levels from here.
All right, fair enough. So euro is going higher until
Yeah.
we see another catalyst, that is dollar strength, and we are unlikely to see. Do you have any data for the dollar in the coming week?
On the next week, yeah, we have an all-important non-farm payrolls data next Friday,
Ah,
and
I saw the date.
if the wires are to be believed, markets are bracing for a horrible number, uh,
I
because I heard that some 39,000 workers have been, I guess they have been terminated or they have gone on strike at Verizon,
okay.
and that is likely to have a negative impact on non-farm payrolls figure. But again, in my opinion, the NFP is not important, but the wage growth figures are important.
That's right. Because the attention has shifted from the payrolls to the wage growth now.
Yes,
It
exactly.
reminds me of the last year. Whenever the NFA used to come out, we used to see a such humongous move in euro dollar
Yeah, right,
and dollar yen. Right now,
right,
it's not so. So I guess the newer traders will not won't know the emphasis of the NFA number as such. But I guess if you're going to trade the euro dollar ahead, keep an eye on the wages number,
right.
and maybe we'll do something on the NFP next week.
Yes, and I guess there is also confusion in the markets that oil prices have suddenly reached 50 levels now.
Yeah.
Brent is trading at 50. So euro traders are worried that it may force ECB to suddenly turn hawkish. So they are in kind of double state of mind whether to go long on euro or go short on euro from here, and that is why it is completely a dollar driven trade right now.
I know, but this is utter nonsense. Draghi has failed to do anything right now, and he has to actually add on to his existing easing mechanism as such. Because I don't guess that oil is going to stand at such levels for quite long. Because when we come back to the supply demand
Right,
mechanics as such, okay, by year end I can guess it can scale back to 50 in the range of 50 to 60. But we are heading lower. I do a
right.
cipher today. My target is at around $40 for Brent.
Okay. So $40 for Brent would mean then euro could come down to 1.0950.
Let's hope so. Let's
Yes, sir.
let's help Draghi. Anyway,
Yeah.
let's shift to dollar yen.
It's consolidation right now. We can see it's consolidated largely in the range of 110.50 to 109. So
I still remember the day when it was climbing from 100 and it broke 110 and people and it's were coming out with targets like 144,
yeah,
135 and whatnot, and it went down. As
right.
I guess it coincided like when the Fed hiked the rates, it just started going moving lower, right?
In my opinion, it was more due to Japan's negative rates rather than Fed's move.
All right. So dollar yen is more impacted by yen at present and not the dollar so much.
Right now, it's like the strength in yen is because Bank of Japan, it's stuck. People believe that it can't do anything now. So no more devaluation of yen.
It
So
can.
let's.
I guess the Bank of Japan can do. It already owns 51% of the 80. It has to
Yes,
buy around
yes,
90.
yes,
Look, people are skeptical, but I guess the Bank of Japan will go ahead and they'll do it. They'll bind it.
yeah. And
Actually,
they fix is like, the only thing that can lift USD JPY in my pair is a Fed rate hike. You know,
okay,
if they do not hike rates, yeah, it is again going lower. And
okay,
the other side of the funny side of the story is if Fed hikes rates aggressively, let's say, then it could lead to risk aversion in markets, and risk aversion indirectly would again, you know,
benefit.
benefit yen. So upside, like, it's just for me, it's just sell on rallies, dollar yen.
All right. So I do have some macro news on yen, but let's discuss it on the Monday, not today. I
Okay.
had the chance to read some reports, and let's discuss it on Monday. Let's
Yes.
come back to the what will happen after the Fed rates and etc. The impacting currency in the next video.
Right.
Uh, let's look at which pair will sell. Do you have any crosses? Do we have any crosses which can be a good trade tomorrow, or maybe in the coming week?
I guess pound yen is a good cross.
All right,
Reason is it has completed the inverse head and shoulder formation. We have a shoulder over here, we have a head and a shoulder,
all right,
and we have a failure. So we treat breakouts as a major bullish sign.
all right,
So accordingly, a failure to take out is a major bearish sign.
all right.
That's
So
yeah. So
okay,
if I see another couple of failures around, 162 area or so, then I would simply turn bearish on pound yen pair, and that goes well with the fact that we are just 1 month away from referendum.
all right. So maybe we can look at the close tomorrow, and maybe the US traders can can give a hint tomorrow
Yeah,
what will happen on Monday.
and I guess pound yen, can give early warning to European traders from now on, because the expectations surrounding referendum, they first would be priced in by Asian desks,
Okay,
and that would reflect more in GBP JPY pair in Asia,
all right.
and accordingly, then you could trade GBP USD in Europe.
So basically, if I get up in the morning tomorrow, I should be actually expecting to trade the ranges, and on Monday I should be looking at pound yen first before I actually plot my trades.
Right, exactly.
All right. So pound yen is the best cross for today. I guess CAD JPY has nothing to do. It is just running haywire now. I guess it is facing resistance somewhere up there.
Right.
And the antipodians, I guess antipodians is not such a good trade now. Uh,
Antipodians are, it's pretty simple to trade antipodians. You just track crude oil and trade accordingly.
all right. And anything on CAD?
I guess oil prices are, overbought, at least on intraday charts now,
All right.
and that means oil prices are due for correction, and so CAD could come under pressure.
All right. That's good. So, is there any other market you would like to look at, or say something for our viewers for tomorrow?
I guess also keep an eye on short duration treasury yields, because a sharp spike in 2-year treasury yield or 1-year treasury yield could actually trigger a drop in equity markets.
I see. Okay, that the tip of your day?
Yeah, that's the tip of the day.
Okay, that's the tip of the day. Sounds fair. Thank you so much, Omkar, for today's analysis.
Thank you, no problem.
Thank you so much for watching, people. If you like this, please share. Do remember to subscribe. Go visit our website at dirteconomics.com. We'll be posting the key levels over there. If you have any queries, just email us at dirteconomics@gmail, or just tweet us at dirteconomics. We'll get back to you as soon as we can. Have a good day. Happy trading. Bye bye. Bye, Omkar.
Bye bye, Kaushal.